Yeah, kid. Are we good? Yeah, we're good? We are good? Could have been a false alarm. Yeah, kid. Welcome back. I'm going to get back to it. The first one was better. It had like more gusto.
So go again, man. I know you don't cut out anyway, so just go.
No, I'm just going to go. You can't, like, you can't recreate the magic.
Yes, you can.
Can you? Yeah, kid! Sorry.
It works.
Welcome back to the Handsome Homebuyer. It smells like cat pee with Handsome. You were on the Handsome Homebuyer podcast. Now you're on the Smells Like Cat Pee with Handsome podcast.
Oh, so does that mean I'm officially not on for a second time, or because I'm taking
it's kind of
great
like
pride in being asked back?
It's kind of like renewing your wedding vows.
All right,
it's special. It's special every time.
Oh, it's special.
Regardless, believe it or not, some agents would not come on the podcast because it was named Smells Like Cat Pee.
Oh,
I got some denials.
Foolish.
That's what I'm talking about. I appreciate that.
Yeah, man.
Obviously, this cat pee smelling podcast and every cat pee smelling podcast is sponsored by, most specifically, Sal Rizzola from Cardinal Financial. We love him. We were at an event yesterday that he put on that I got to speak at, that you graciously came to watch me speak for what Greg told me was way too freaking long.
No, a little bit.
Greg's like, you should have kept it to 45 minutes.
We're talkers by nature, and it happens. But, I thought it was great. I always get a lot of value out of listening to, you talk about this. I pick up a little nugget here or there each time.
I appreciate it.
So, yeah, it was great.
So, for those of you who don't know Uncle Lou.
Yes, Uncle Lou.
Uncle Lou.
We're sticking with Uncle Lou.
Burst onto the scene probably, 2 years ago?
It's been about 2 years now, yeah.
Burst onto the scene, saw you on social media. We podcasted originally just out of the blue. Then you did your own podcast there out of the blue. And now you're like everybody's uncle and a social media icon in Long Island.
No, I wouldn't go that far. That's you, but...
And have carved out a niche in the real estate world, which was totally underserved. Mm-hmm. And now isn't as much because you're here, thankfully. And you're even leading the charge with the young group. And you got a compliment the other day from probably the toughest person in real estate I know.
Oh, who's that?
Beth Lowe.
Oh, Beth Lowe.
Beth Lowe's like, I'm working with Lou. I love him.
I love Beth. Love you, Beth. Thank you.
Beth just doesn't love anybody.
Listen, she's like, Titan, right?
She's the queen bee. She's the queen.
That's what everybody says.
She's the queen.
And I believe it.
She either knights men or chops their legs out from underneath them.
Well, I'm glad to hear that I've been,
you've been knighted.
Officially knighted by Queen Beth Lowe.
Yes, you've been knighted.
Thank you.
So, yeah, listen, so you and I have been chopping it back and forth because I've actually been kicking out a lot of...
Oh, and I love it.
Thank you. Content in regards to realtors where realtors don't realize that they're running their own business, right? And when you run your own business, there's a lot of things that go into running your own business on the back end that isn't glamorous, mainly like accounting type stuff, right?
Correct.
And since we're coming up at the end of the year, which was your idea, and I was like, that's brilliant, we got to sit down and educate realtors so that they can get their things together for the end of the year, but more importantly, because they might be too far gone at this point, for the first of the year to start fresh in a clean slate.
100%. And first off, when you put it out, it hits a little different because this is the work I do. So, of course, I'm going to talk. And I try to take a boring topic, taxes, financial planning, financial literacy, and make it digestible, right? So it's like, okay, I kind of get it. I understand the way he breaks it down. But when you made that post about, hey, every realtor should be on payroll, I was like, oh my God, this is a gift right now. So I just started resharing it. And then I started noticing that other people were mentioning me on the, like, oh, you got to have Lou, and Lou's got to talk. And I was getting DMs too. I got like 2 or 3. I'm not going to
that's
say
good,
I got
though.
a bunch. But I got like 2 or 3. And they're like, hey, did you see Charles' post? I said, yeah, I'm actually commenting on it right now. And I think it's invaluable, especially at this time, because we are in the fourth quarter, and it's important to get all your ducks in a row for the upcoming tax season, number one. Number two, I keep hearing, and everybody says, and we all know, the market is changing, and we're going to have to do things differently in 2023, I think. So a realtor's biggest expense is taxes. Yeah. And you realtors don't believe me? Look at your tax return. Think about all the money you spent on everything else, and then look at what you paid in taxes. It may be one of, if not the biggest expense you had.
So I think very important, right? Because even though everybody knows you, because you're you, right? I think it's important to define who you are and what you do before we go down this rabbit hole that is like accounting, taxes, and corporate structure.
Yeah, but we're gonna keep it very quick and easy because I want to do 2 things today.
Oh boy.
I want to, not be boring, and I want to kind of stay on topic and talk about taxes because I really
Yeah.
think this podcast alone, we're going to save somebody thousands of dollars.
I'm with you.
In this episode alone. So who am I? Lou Soriano. I am a CFP. I'm a certified financial planner. I'm also an EA. I'm an enrolled agent. It's a designation that's issued by the IRS. Take a 3-day exam or a 3-part exam. So I'm a CFP and an EA. A lot of people call me CPA. I'm not a CPA. I'm an EA, CF, and a CFP.
What services do you offer so that people know?
Yes, so financial planning, retirement plans, insurance, taxes, and now bookkeeping. With my daughters, Lauren and Celine, we started a new business called Agent Bookkeeping Solutions. It's named Agent Bookkeeping Solutions because, quite honestly, we're just looking to work with the real estate agents that are out there that could use that type of service.
Love it. Which, again, totally underserved. No one's really doing it. And it is so important to have your shit together and be organized because they can't come up to you at the end of the year with a 1099 and a shoebox full of receipts and say, make this work.
Well,
it's just not going to work.
I'd welcome a box of receipts at this point, to be honest with you. Because usually I get the 1099 and what could I write off? And I'm like, we're kidding right now, right? No, I just don't know. So, and I say that half jokingly, but the reality is in having one-on-one conversations with a lot of realtors, there really is a lack of financial literacy out there, not just with realtors,
Period.
with a lot of young people.
Period.
And I think it's somewhat done intentionally at the school level, meaning in high school. You know, they'll teach you how to, at least I'm a little bit older, we had home economics. They teach you how to iron and sew and bake a cupcake, right?
I made a pillow. I remember it.
Right? Or
Wasn't a
wood
nice
shop
pillow.
class and things like that. But they should teach a little financial literacy too, like, you know, what's a stock, what's a bond, how to write a check,
Yeah.
you know.
People don't write checks anymore, man. Like I realize
I write checks.
yeah, but they don't. Like, it's
Okay,
weird.
so
Like-
guess what? All right, point taken.
Yeah.
Teach about how to use, some of these mobile apps, the cash apps.
Yeah, Zelle and all
guess
that.
what? There's new laws that have been passed that they're going to start kicking out 1099s from some of these mobile apps like Venmo, PayPal, and so forth. So yeah, you got to know about that.
So before we delve into just like the corporate structure and all that stuff, what are the, like, realtors come to you, hundreds of realtors come to you, right? You're a staple in the real estate community now. What are the problems that you are seeing in regards to the structure, tax planning, retirement, lack thereof, everything under that kind of umbrella?
Okay, so the number one problem that I see with self-employed individuals, but we're talking to the realtors because that's who we know and love, right? They do not have a separate bank account for their business.
No.
Number one problem across the board. And just go back 2 years ago when they were when PPP was being rolled out, and
A
some
lot
of
of
these other
realtors
programs.
lost a lot of money that they could have gotten.
You know why they lost it? They
Because-
didn't have a separate bank account for those who were self-employed, meaning you weren't an LLC or an S corp and things like that.
Yep.
You were just claiming your income and expenses on a Schedule C on your personal return. The fact that you didn't have a separate bank account, they's like, well, how could we give you PPP? Like, we don't know how much you're bringing over from your business account to your personal account and counting that as salary. People, it was called a paycheck protection program or payroll. If you weren't running payroll, you can't get it. Or if you can't prove how much you were paying yourself on a weekly or monthly basis, they couldn't issue it. And then with those who were structured as an S corporation, a lot of S corp realtors who had S corps, they weren't running payroll either, so that knocked them out of the box.
Have
So
you had
separate
any, have
bank
you had
account
any
payroll.
realtors coming to you that were actually running payroll when they came to you?
Yes.
Really?
Yep, I have quite a few. Not well.
That
oh
came
yeah, I
to you
have
set
many.
up.
Yeah,
Wow, really?
I don't want to mention names, but
No, but
yeah.
like as a percentage.
Oh, a very small percentage.
Okay,
but
there we
yes.
go. Got it. Okay.
But I'll tell you this: the more successful realtors, they have this in place already.
So explain to people what you mean by that, because I made that video. I was like, you should pay yourself a paycheck, and realtors are like looking at me like, what do you mean pay myself a paycheck?
Yeah, so there's a couple of ways you can do this. If you are just starting out, you're a sole proprietor, first thing you got to do is have a separate bank account. Once you have a separate bank account, you should have your commission checks deposited into said bank account. And then as you need money for your personal expenses or decide how much you want to take out of that commission check and just count that as a paycheck. It could be as simple as that.
Yeah.
So it doesn't have to be an actual check where you're writing something out and then you go into the bank and depositing. You literally just transfer, and I'm just going to use a number like $500 every week. So if you set aside $2,000, right, from a commission check that month, just move over $500 and you're going to call that paycheck or your payroll. And if you have other expenses that exceed that $500, well, of course, just bring that over too. But in the case of PPP a couple of years ago, and I don't ever think we'll see this situation again, just that one transfer of $500 a week would have qualified you for PPP.
Yeah.
So just by doing that. So that's one way. The second way is if you're structured as an S corporation, which is something I could get into in a minute, but if you're structured as an entity, S corp specifically, it's required that you run payroll. You have to take a reasonable salary, pay your FICA taxes, the F word I call it, right? Your Medicare and your Social Security. And then the rest goes over as a distribution. And the way you do that, you could do that quarterly, right? Mm-hmm. Report it quarterly, or you could hire a payroll service and they'll do it for you.
No, absolutely. So, and just so people understand, right? Because that's the way I do it. I own a lot of different companies. The companies own real estate and businesses and all kinds of stuff. And there's an S corp at the top, and everything flows up to that. And I get a paycheck through a payroll company every single week.
Awesome.
And then there's tax benefits associated with doing it that way, if you want to explain that to the realtors out there.
Wow, this is a good one. So, Charles, I'm literally working with 2 clients this week, this week and last, both of which did really well last year. They made over $200,000 net. One was set up as a sole proprietor, the other as an LLC. Just for the record, LLCs in and of themselves do not save you taxes unless you're an LLC and make the S corp election. Not going to bore you there, but just know that. So if you're just an LLC sole proprietor, you're taxed the same way. And your net income, all of it, is subjected to FICA or self-employment tax. It's 15.3%. So if you were structured as an S corporation, you could split your income. You could have half of it as payroll, half of it as a distribution. But when you're self-employed, all of that net income is subjected to self-employment tax. So you're paying federal tax, you're paying state tax, and you're paying an additional 15.3% in self-employment tax. So for every $100,000 to put numbers on it, it's an extra $15,000.
Yeah. So basically, to make that simple, right? If a realtor netted $100,000 and they're structured properly, right, as an S corp, and they're taking a paycheck every week and for half and the rest is distribution, they're going to have $15,000 extra of that $100,000 left over for them that they wouldn't have had if they didn't do it properly.
Sort of. So just putting numbers to it, because when you just explain it, when I just explained it, maybe it wasn't clear. If I'm a realtor, I net $100,000. I pay 15.3% on that, in addition to federal and state. So it's $15,000.
Oh no, I'm sorry. It was the $15,000 on the $50,000. It was 15% on the $50,000.
Correct. Now, if you're an S corp and you take that same $100,000 of net income and you designate $50,000 as your salary, and the other as a distribution, well, only the salary is subjected to self-employment tax.
Yes.
Using this scenario of $50,000.
Saves you $7,500.
There you go.
There you go.
You just saved $7,500 right there.
Which is 7.5% of your gross.
Correct.
Yeah. Which is a lot of money.
$200,000. So the scenario I was describing when we started this,
15 grand.
It was 30 grand because they made over 200,000. So they paid 15% on 200,000. If they would have been structured properly as an S corporation, they could have cut that in half.
Now, I think it's important to make this point right now. I think there's a lot of people that are realtors, right? And they're like, yo, my stuff is simple. I get a 1099 at the end of the year. I don't need somebody like Lou to do my taxes and stuff for me. I can do TurboTax or whatever, right? And I don't want to pay whatever it is for the services that you provide because they don't see the value in it because they don't understand. If they, now, they don't understand what you just said. They're not currently doing it. They're making $100,000 a year. You just saved them $7,500.
Correct.
One shot. Just
shot.
on one line item.
Yeah, but here's the thing to point out, Charles. Not only did it, in that scenario we saved $7,500 this year, we're saving you $7,500 every year thereafter.
That's what I'm saying.
And as your income grows, that saving grows as well. So it's not a one-time. So the realtors that I'm talking about now, one of them has been structured as a sole proprietor for 10 years and has been killing it for 10 years.
And has lost, given away a lot of money to the government that he
Yeah.
or she didn't have to do.
Yeah, the IRS won't audit you if you overpay your taxes.
Yes.
Yeah.
So that's the thing. You have to understand that A, all accountants, enroll agents, et cetera, aren't created equal, right?
Mm-hmm.
And then B, it's not an expense. It's a value add to your business.
It is. So a CPA, enrolled agent, tax professional, I'll call it, they should save you more than you pay them. So that's the value there. If you, and this is the other thing I guess I should mention because it just came to mind. Not all tax professionals are tax planners. They literally just prepare your tax return. You give me what you got, I'm going to prepare. So that's the compliance part of it, right? They prepare a return. A tax planner is having the discussion we're having here today, where it's like, oh, you're making this much, you should be structured as an S Corp. Here's why. And then talk about different things, have a plan in place to save you taxes not only this year, but every year.
Going back a little bit to the paycheck thing, because I think this is something that like realtors don't grasp or they have to grasp, or any
Yep.
commission salesperson. It's like feast or famine, right?
Yeah.
Either, sometimes, especially at the beginning of your career, there's highs and lows. All of a sudden you have, 2 or 3 checks and you have, a windfall in your bank account, and then there's 2 or 3 months where you get no checks.
Right.
You have to set goals for yourself, and then you have to sit down and you have to say, this is what my lifestyle costs me. This is what my rent is, my car payment, my cell phone, whatever it is, right? And you have to budget that and say, okay, what are my overall expenses on a weekly, monthly basis, whatever that is. And then that's how, in my opinion, you would set up that paycheck. Make sure that it meets, exceeds a little bit, what your expenses are. Be modest about it. Don't live crazy until you're, closing a lot of deals. And then what's ever left over, you get the benefit of, not paying all the taxes, and you get yourself into like a system. And then also it keeps you from blowing money, because if you're only moving X amount of dollars over to your account, you don't see like 15 grand in your account. And you're like, oh, okay, great.
Right.
I'm gonna go to Miami for the weekend. I'm gonna blow 5 grand. I'm gonna do this. I'm gonna do that.
Right. So you're 100% right. And I just want to emphasize this too. And I know you know this to be true. I work with realtors who are just starting out right now, day one, and realtors who I've been working with for about 20 years and everything in between. So I think the ones who are successful are the ones who plan like early on in their careers and do some of the things we're talking about here today.
Yeah.
And sometimes it's not as hard as you might think it is. So you don't have to get on payroll right away. You don't have to set up an S Corp or an LLC right away. I'm not a big believer in that.
No.
I think but you should be having a system to track your expenses.
Yeah.
We can do that for you now, Agent Bookkeeping Solutions. Or just have a spreadsheet. Use QuickBooks. You don't have to use a service like ours. Honestly, you can do this stuff on your own. But that's the first thing. Second thing, you have to have a separate bank account.
Yeah.
Once you start doing these things, now you're starting to hold yourself accountable.
Yeah.
And it's not just, and it's impossible to really accurately prepare your taxes at the end of the year without these things, because then you're going through your personal bank account statement and credit card statement, trying to fish out what was personal, what was
It's a mess.
business. And it's a mess, not for the reasons you might think. When I say prepare it correctly, I mean accurately. You might be missing deductions.
Yeah.
Because you can't tell what's what. Everything is mixed into one pot.
I mean, listen, the reality of it is this. This is really how you do it. You become a real estate agent. You have a passion for it, great. You don't know if you're going to stick with it or not. You're going to be good at it or not, most of them.
Mm-hmm.
So a year or two, you want to operate from the standpoint of like, things are commingled, you're not investing in LLCs and things like that, that's fine. But
Right.
once you hit the point where you realize, hey, this is going to be my career for a significant period of time, I'm generating real money in business, you have to become legit.
Yes.
Right? And that's usually like beginning of year 3. If you're making money and you're closing 5, 6, 7, 8 deals plus a year, now it's time to sit down with somebody like yourself, although there's no one like Uncle Lou, right?
Thank you.
And then structure this properly. So necessity being the mother of all invention, we're talking about the bookkeeping business.
Right.
Let's discuss it because there's obviously a big need for it. I have discussions with small business owners, all the time about this. And the big issue that business people have, right? And realtors is a little bit simpler, but the business people have is they don't actually know if they're making money.
Right.
What they do is they churn money all the time.
Yeah,
but
just
they don't
keep making it.
They don't actually know if they're actually making it.
Yeah.
They have expenses, money comes in, it goes out,
Right.
but they don't really have like a real granular understanding of are they making money or are they not making money. And that's a problem.
That is a problem. So even with some small business owners that I work with that are not realtors, meaning they actually have employees, they have overhead, things like that, right? Sometimes they're asked for a profit and loss statement or a balance sheet. They can't produce it without bookkeeping.
Yeah.
And they're like, no, I know, like I just kind of keep this separate account and I only use this one card for paying. I said, yeah, but, and where you get hung up, Charles, is not so much by, it's when you go to apply for a loan, for example.
That's what it is.
They're going to ask you, sure, we'll lend you money. You have a business. You're set up as an S Corp, LLC, what have you. Can you produce a balance sheet?
Yeah.
Do you have a profit and loss statement?
Yeah.
If you don't have that, you're out.
And that stuff it's super important. And I was lucky because my accountant set me up really early and he's like, listen, like if you want to be legit,
Right.
You're going to be going to banks for money at some point. You have to make income, you have to show it, you
Yeah.
have to be structured the right way. I have a whole team of basically 3 people that handle all my finances all the time. If we do a refinance loan, Mark probably puts 40 hours into it and we're totally set up between all the regulations, the things that the banks want,
Yep.
personal, business. Once you get more complicated, there's so many different layers and entities and they want to understand where all the money's coming from and where it's going and what their risk profile is. If you're not set up, it's a disaster.
It is. And as complex as you made it sound, and it is for someone like you, for a realtor, it's not that complex. It's actually much easier. So with that in mind, when you start out the right way, and the right way, I mean, you're just kind of keeping track of your expenses and having a separate bank account. Like how easy is that, right? I find that some realtors, and I hope this isn't going to be the case for this next cycle that we're in right now, that they decide to try a different business because this isn't working for them. And the reality is it's not that it's not working for them. You did okay, you made some money, you just didn't plan for the tax bill of $10,000, let's say, at the end of the year.
This is like a really big thing, huh?
Oh yeah, you spent all your money and now it's like, all right, well, I don't have the money to pay the $10,000, and I'm just using that as an arbitrary number, by the way. It could be much more, it could be less. How do I pay the IRS? I don't have it. Okay, well, I could get you on an installment agreement or an installment plan with the IRS. So you're on this installment agreement. By the way, realtors love to get their taxes prepared in April, which is a really bad time to do it. Why? Because you're going to prepare your taxes in April or extend them to October. I just got done doing many extensions for realtors. And then you owe this hypothetical $10,000. Now you want an installment agreement. But guess what? Now you're just going to start making payments, let's say in November, December. Now we're back in January. We're going to do 2022 taxes. And you're going to start the cycle all over again. You still owed from last year.
Yeah.
And now
and on top
you're going to owe this year as well.
And the risk also there is if you're making less money, because let's say you're in a market where you're not going to be making as much money.
Right.
It's an added layer of stress.
Yeah, it is a big stress. And then that's what starts to happen. And I've seen this happen before where it's like, you know what? I just keep paying taxes. It's not worth doing it. It's like, well, you're paying your taxes all at once or you're getting on these payment plans. Stop doing that. Put yourself on payroll on a monthly or quarterly basis. Then it's much smaller chunks. You don't notice it as much.
Of course.
You do feel it, but it's not like 10,000. It's 2,500 a quarter.
And it's also like my accountant says to me, right, which like it's hard to argue with him on this when he says it because listen, nobody likes paying taxes. Nobody.
No, I don't. I prepare taxes.
Nobody.
I don't like paying taxes.
So he says to me, you know what? It's not a terrible thing to pay taxes on money that you've earned. Like you're making money, right? So thankfully you're making money. Someone has to go to taxes. If you budget it out accordingly, every paycheck or whatever it is, it's not as painful. But that's really important. What I think also a really important thing to talk about before I even ask you what other issues you see with agents on a daily basis, which you feel we should talk about, is I feel an obvious one is retirement or lack thereof.
Oh man, that's a big one. But they're not thinking of that because they're all 20-something, right?
Yeah, and they're going to live forever.
Yeah,
And
but
they're
I
never
was
gonna-
20-something, what seems like yesterday, and that was 30 years ago.
But you look the same. You probably have like 2 or 3 gray hairs more.
No, I cut my hair often to keep the grays
At bay.
manageable. Yeah, it's manageable. Gel does wonders too. So
You're not going to get hair sympathy from me, man.
I know. I'm
that,
talking to the wrong guy.
Yes,
in
the
that
wrong
regard.
guy, if that's the case. But yeah, you're running your own business. Listen, running your own business has like great benefits and things that aren't so great in the sense that nobody's there to hold your hand.
Right.
But you have ultimate upside. You personally decide how much you're going to make based on how hard you want to work, how innovative you want to be, et cetera, skill set, et cetera. So with that comes great responsibility, which is nobody is taking care of you for retirement if you're not taking care of yourself.
No, and the one thing I like to say to all the young professionals, real estate or otherwise, who are in their own business, and I'm putting this in air quotes, because until you have certain things in place, you really don't own a business, you own a job.
Yep.
So if you are not on payroll, if you're not handling your taxes, if you're not planning for retirement, guess what? You just own a job because you're not putting things in place. A business is one that has these things in place so that when you go to a bank, you could show financial statements, get loans, right? You're planning for retirement, which is very important. And you should do that as early as possible because time is on your side.
Yeah.
Compounding is a very real thing.
Well, to that, I can't even say you're like, yes, you're buying a job, but it's even worse than that because when you have a job, they take care of you in a certain extent. Like,
Exactly.
They're going to pay the taxes and pull out of payroll. You might get benefits when you
Uh-huh.
work. You might have retirement, a 401k, whatever it is.
Right.
As far as retirement goes, that's something that should be started. I worked at a 7-Eleven when I was 16 years old, from the time I was 16 to 20,
Awesome.
which was kind of like, you ever see the movie Clerks?
Yeah, I worked in the supermarket
was-
from like age 13. I lied about my age, got a job. You had to be 15 at the time.
Wow.
Yeah, I've been working my whole life.
Those were like, and those are great years. It was kind of like the movie Clerks with the weird people that looked at the eggs and all that stuff.
Yeah.
But the guy who managed the 7-Eleven, who was my ice cream man, that's how I met him, told me that I need to open up an IRA like immediately.
Oh, really?
And I
Gave you that
opened up an
advice?
IRA at like 16 years old.
Oh, wow.
And as you said, compounding, it triggered.
Yeah.
One of the most powerful forces in this world is compounding interest.
Oh, it's. I think it was Einstein who said it's the eighth wonder of the world, ninth wonder, whatever it was.
What is it? Does money double every? Money doubles every 8 years or something at a certain.
Well, there's a
rate,
rule.
right?
There's a
Yeah.
rule of 72.
There you go.
Where you take like an interest rate, call it 10%, and you divide it by 72, and that kind of gives you a gauge of how long it'll take for your money to double. So using that, it'll be 7 years,
7.2
and
years, yeah. So 7
2
years.
months or something, whatever it is.
So there's a lot of agents that I know that like aren't old, but they're not super young, and they're like, in their late 20s and early 30s, and they don't have a retirement account.
Right.
That's 10, 12 years already gone by if they opened one up when they were 18 years old and they were depositing the max into
Man,
it.
Charles, you're opening up a can of worms because I've worked with some realtors who've
just
been
got
in
so
the
excited.
business
You just got
for.
so excited.
Yeah, man, I'm starting to step up. I've worked with some realtors who have been in the business 15, 20 years, and they're actually looking for part-time jobs now. Not so much for the money, but for the benefits because they didn't plan for retirement and things like that early on in their careers. So they're still doing well, but they know that, hey, if I worked as an employee and I'm part of a 401k plan, I get a match or I get health insurance. That's another big thing.
Health insurance is a big
So
thing.
these are all important things. And I would just say that, yeah, it's easier to, I think if you're a young realtor, you really should expect to put at least 30% of each commission check away for taxes and retirement plan. So when I use a number like that, that sounds a lot. It's like breathtaking, right? But you're going to realize you'll thank me later if you do that. So I definitely recommend that you do that. And then for the realtors who've been in the game for a while and are doing well for themselves and everything, you have young kids, you should consider hiring your kids in your business. If you have teenage kids, you could hire them if you're structured as an S Corp, put them on payroll. It could be a nominal amount, doesn't have to be a lot. But let's say you pay your teenage son or daughter $12,000 a year. That $12,000 allows your teenage, just like the advice you got, children to then contribute to a Roth IRA because they have earned income, but they can't contribute without earned income, number one. If they're under age 18, you don't even have to withhold, or they don't have to pay self-employment tax. So that whole 15.3% we were talking about earlier, that goes away. So it's like win-win, and you have to legitimately have them help you in your business. So, you know, if you had a son or daughter, or if you have a niece or nephew, they could work here, they could clean the office, they could help set up the mic stand, they could work doing almost anything that you designate, right? Pay them $1,000 a month, and then on top of this, last thing, they don't have to pay any tax on that because the standard deduction is $12,000. So if you pay them $12,000, they claim it on their tax return. Standard deduction is $12,000.
Tax-free.
Tax-free money.
Perfect.
Yeah.
Mic drop.
Oh.
So to close out, what is kind of the overall, or if there's another point that we missed, advice that you would give to agents of things that you see, you know, on a daily basis that you feel are important for them to know in this space? Yeah.
So just a couple of things I'll just rattle off. One, once you start netting, having net income after expenses of $40,000, $50,000, you definitely should consider being taxed as an S corporation. I won't go into why here, but we did talk about that a little earlier. Second thing I would say is plan for your retirement. Put some money aside. The earlier, the better. That's also a good thing to do. Set yourself up right, the payroll and all that stuff. Withhold enough from taxes and have a separate bank account for your expenses and your business. And then lastly, I'll say, don't believe everything you hear on social media, and even if it's from me, because it might not apply to you always. So sometimes we hear a lot of tax advice. That's what I get a lot of. It's like, oh, Lou, I'm gonna buy a car and write it off. And I'm like, you made $30,000 and you wanna buy a $100,000 car, or whatever the case is. That might be an exaggerated example. But a lot of people do hear about all these write-offs on social media, and they want to apply them, but it doesn't always make sense for you. And an S corp might not be right for everybody. You know, things
just
like
because
that.
you saw a TikTok that said if the vehicle weighs over 6,000 pounds, you can write
That's
it
the
off
one.
the first year.
Yeah, that's the thing. So, and then the other misconception is, like, let's use a big number, like you owe $50,000 in taxes. You say, well, if I bought a $50,000 vehicle, right, then I don't owe anything. No, you just get to deduct another $50,000 from your income, and now maybe you owe $30,000 instead of $50,000. It's not a dollar for dollar thing.
Yeah.
So there's a lot of misconceptions there, and unfortunately on social media you get a lot of people who are offering tax advice, but they leave a lot of information out there, so it's really kind of misleading.
Yeah, listen, I love knowing you. You're an invaluable member of the community. Real estate agents should thank you. The service is amazing, and I know that you are, very open and willing to, talk to people either on the phone, DMs, etc., emails. We're all here to help each other. If people are looking for tax advice, which they should be, if they're looking for obviously investment and retirement advice, which they should be,
yes.
How do they get a hold of you?
Yeah, so you could call my office. You could get me on Instagram. I'm most active there, and it's at Lou Soriano 1. If you want to reach me directly, my direct line is 631-236-5842. And I respond to everybody personally, so I'll say that. And I also work with people, whether you're just starting out or you've been in the game for a minute, doesn't matter. I'll also offer this value prop if you want. I don't always suggest people change accountants. I have people who hit me up and they say, hey, I want to switch. I want you to do my taxes. And I said, well, let me see what you got. I looked at their returns over. I said, doing fine. Like, there's not a need to change. So if you want to have a second set of eyes on your tax return and things like that, that's something I'm willing to do as well.
Awesome. Love it. Thank you. Obviously, if you have a house that smells like Cappy, I'm willing to buy it. 516-7777 sold. Cardinal Financial, my man Sal Rizzolo. Don't sleep on him. That's a wrap.
Thank you, brother.
We're done. That was good, man.
I try to keep it.
No, taxes are exciting.
It's not.